Hi, today we're diving into 5 high-yield dividend stocks with share prices under $50 that you can consider holding forever. If you're looking to build a portfolio focused on consistent passive income, this is for you. What is a high-yield dividend stock? High-yield dividend stocks are investments that pay shareholders a large percentage of their share price in dividends. They're ideal for generating steady income while potentially benefiting from capital appreciation. These stocks are especially attractive if you're looking to build wealth long-term or secure retirement income. We selected these stocks based on dividend yield over 3%, share price under $50, strong financials, positive cash flow and manageable debt, industry diversification to spread risk across sectors. Here are the stocks. Pfizer PFE, industry, pharmaceuticals, yield 5%, price $38. Why hold industry leader with consistent dividends? Realty Income, O, industry, REIT dividend. Yield 5.2%. Price $50. Why hold the monthly dividend company for consistent passive income? NNN REIT, NNN industry, REIT dividend. Yield 5.89%, price $38. Why hold 34 consecutive years of dividend increases? Hormel, HRL. Industry, consumer staple. Dividend yield 3.71%, price $30. Why hold? Dividend king. VC Properties, VICI. Industry, REIT dividend. Yield 5.88%, price $28. Why hold? Good source of passive income. Why hold forever? Now, why hold these stocks forever? High-yield dividend stocks provide stability in volatile markets, predictable cash flow, and the opportunity for your investments to grow exponentially through reinvestment. Risks and considerations. No investment is without risks. Always assess a company's financial health, debt levels, and market trends. Diversification across sectors can also mitigate risks. There you have it. 5 high-yield dividend stocks under $50, primed to help you build long-term wealth. Do your due diligence, stay informed, and consider these stocks for your portfolio. If you found this helpful, hit like, subscribe, and share with fellow investors. See you next time on Dividend Drift.